All right, picture this. You're the most famous tech company on the planet. You just absolutely crushed your earnings, and then, in the blink of an eye, you lose $500 billion in value. Sounds crazy, right? Well, that's exactly what's happening at Apple right now. Welcome to This Explainer. Today, we're diving deep into Apple's paradox. Are they in the middle of a full-blown crisis, or are they just going through a very messy, complicated transition?
Let's look at this wild contradiction. Apple just reported an absolute monster fiscal Q3 for 2026. I'm talking a spectacular 16% jump in revenue, bringing them to over $109.4 billion. And iPhone sales? They surged 22% to $54.3 billion. But here's where it gets weird. Despite beating expectations, Wall Street completely panicked. The stock tanked nearly 10% on the very first day of trading after earnings. Boom, $500 billion in market value just gone. Just like that, they got booted right out of the exclusive $5 trillion club. So you've got to wonder, how does a company report its most profitable quarter ever and immediately lose $500 billion?
Well, to understand that, we need to talk about Section 1, the financial catch. Let's peel back these numbers and find out what actually spooked investors.
The catch really comes down to a single number, $2.19 billion. It turns out this was a one-time tariff refund that Apple received. And when you back out that sudden windfall, the whole picture shifts. That refund practically handed them 11 cents per share and pumped up their gross margin by roughly 2 percentage points. If you take that away, their margin lands right at 48%, which is exactly what analysts expected in the first place. So, that massive earnings beat? Not quite the organic home run it looked like on paper.
But honestly, the real reason the stock dropped 10% was their Q4 guidance. Apple projected revenue growth of just 9 to 11% for the September quarter. Now that falls significantly short of Wall Street's $115 billion expectation. Why the low projection? Apple warned investors they are facing severe supply constraints. And look, in the hardware game, it's pretty simple. If you can't build it, you can't sell it. It doesn't matter if everyone on Earth wants to buy one.
Which brings us to the actual root of this whole problem. Let's get into Section 2, the memory crisis. During his final earnings call as CEO, Tim Cook dropped a pretty heavy phrase. He called the current global shortage a 100-year flood in memory pricing. He flat out said the volatility we've seen over the last 6 months is completely unprecedented in his entire career. You know, when a legendary supply chain master like Tim Cook throws around a phrase like a 100-year flood, you know things are genuinely disastrous.
It's this crazy domino effect. Basically, it started when giants like Google, Meta, and Microsoft started dumping massive budgets into their AI infrastructure. Because of that, chip manufacturers had to instantly pivot. They redirected all their manufacturing output toward high-bandwidth memory for those AI servers. But because they did that, the supply for standard consumer DRAM, the everyday memory that runs your smartphone, just vanished. So now, get this, Apple literally has $1 billion worth of finished, cutting-edge A20 Pro processors sitting in a warehouse totally useless. They've got $1 billion of brains for their new phones, but absolutely zero memory chips to actually run them with.
So what does Apple do? They start looking at some pretty extraordinary alternatives. Right now, they're actively testing memory chips from a Chinese manufacturer named CXMT to throw into iPhones and MacBooks. But that move instantly triggered bipartisan pushback from the US Senate, with lawmakers urging Apple to just drop the plan entirely. Plus, there's a big tech compromise here. Reports say CXMT's technology actually lags behind industry leaders like Samsung and Micron by about 2 to 3 generations. It's a really desperate move for desperate times.
And right in the middle of all this supply chain chaos, there's a massive human drama unfolding. Let's move to Section 3. Tim Cook passes the baton.
We are literally watching an era end. Tim Cook, who took the reins way back in 2011, is officially stepping down on September 1st, 2026, transitioning into the executive chairman role. Stepping up as the new CEO is John Ternus, their senior VP of hardware engineering. And what's super fascinating is his very first move. Ternus is already reshuffling the deck by bringing Laura LaGrosse, a former hardware VP who retired back in 2022, out of retirement and back onto his management team to help steer through this historic storm.
But wait, it doesn't stop there. The new CEO has another massive headache waiting on his desk. Section 4, the legal thriller.
This legal battle between Apple and OpenAI is moving at absolute lightning speed. Check out this timeline. On July 10th, Apple officially sues OpenAI. Bam! By August 3rd, they're already in federal court demanding a preliminary injunction. And then just 2 days later on August 5th, OpenAI fires right back seeking a total dismissal. The sheer pace of this shows just how much urgency and, frankly, anxiety there is on both sides right now.
So what's the actual core of the fight? Well, Apple is straight up accusing OpenAI of trade secret theft. They specifically named 2 former Apple employees, Tang Yutan and Chang Lu, who are now working over at OpenAI. Apple believes OpenAI is using their confidential info to fast-track their own consumer hardware ambitions. I mean, just imagine being the company that invented the iPhone, and suddenly you're terrified that the team behind ChatGPT is going to build a device that replaces it. Obviously, OpenAI forcefully denies this. They say they're building something completely new and have absolutely zero need for Apple's secrets. It is literally a showdown over the future of AI hardware.
Yet, despite a memory shortage, a leadership shakeup, and this massive lawsuit, the consumer product machine just keeps churning. Let's look at Section 5, the product pipeline.
So, Apple just rolled out the brand new iPhone 17 lineup on August 8th. The real standout here is the iPhone 17 Air. It sits right in the middle of the pack, starting at $1,000, and it features this crazy ultra-thin 5.6mm profile. You also have to notice the iPhone 17 Pro. Apple actually pushed through a $100 price hike on that one, bringing the starting price up to $1,100. But you know what everyone is really waiting for? The big September 9th event. This is going to be John Ternus' very first major product launch as CEO. We're expecting to see the iPhone 18 Pro and Pro Max. But get this, there is absolutely no standard iPhone 18 model expected at all. That is a massive break in tradition for them. We're also anticipating the Apple Watch Series 12, which might finally see the highly requested return of the ceramic edition.
However, the crown jewel, the absolute most anticipated device of the fall, is the iPhone Ultra. According to reports, this is going to be Apple's first ever foldable device. We're talking a book-style folding mechanism with a massive 7.8-inch inner display. If they can actually pull this off, it's a total game changer that could completely redefine their entire hardware lineup.
But that brings us crashing right back to reality with Section 6, Wall Street turns bearish. The looming question here is pretty simple. Can Apple actually manufacture these incredible new devices in the middle of a historic memory chip shortage?
Well, analyst Edison Lee at Jefferies definitely doesn't think they can pull it off. On August 10th, he slapped a downgrade on Apple's stock, rating it underperform with a price target of $263.66. That signals a pretty painful 16% downside. His reasoning? He bluntly stated that Apple is no longer viewed as the absolute king of the supply chain.
These bearish warnings really come down to a few harsh realities. Lee points out that trying to launch completely new form factors, like a foldable phone, is just too difficult under the current supply conditions. On top of that, and a huge shocker, reports indicate that Apple's highly anticipated 20th anniversary all-glass iPhone has been outright canceled. Because of all this, analysts are now seriously lowering their estimates for Apple's average selling price growth over the next 5 years. So we have to come back to the question we started with: crisis or transition? Look at this perfect storm. You've got a 100-year flood in memory chips, a high-stakes legal showdown with OpenAI, serious downgrades from Wall Street, and a brand new CEO taking the wheel. Is this a fundamental breaking point for the company, or is this just a really messy, painful evolution into their next big era?
I want to leave you with this final thought. Can the world's most valuable company, with all of its endless wealth, all of its talent, and sheer market power, actually escape the physical limits of global supply and demand? When September 9th rolls around, we're going to see if John Ternus can pull a rabbit out of a hat, or if Apple finally has to bow to the constraints of the real world. Definitely keep that in mind as we watch this incredibly dramatic transition unfold over the next few months. Thanks for joining me for this explainer.